Hi, Jonathan York, Bay Financial Partners, looking at investment markets. In a surprise move, there's been a pause in the military actions between the US and Iran. Now, apparently Trump has come out and said this is in order to give peace negotiations a chance. But just coincidentally, his poll numbers are falling dramatically in the US, and really people are certainly not supportive of the war. So is that a possible reason for the pause? But he's also enacted a further round of tariffs between sort of 10 and 12.5% against around 60 countries that make up around sort of 95 to 98% of the trade done with the US. And apparently the reason for these tariffs is for countries that have failed to sort of curb forced labor practices. Which again is sort of quite ironic because a lot of the things that the Trump organization has been selling, sort of phones, etc., have all been produced in these countries. Now, on the back of the pause in hostilities, oil's come back a little bit, but it's still trading at some pretty high numbers. And that's obviously inflationary for the global economy and will certainly push fuel prices up in the US as well, which will be very unpopular. Now, quite a big week for earnings this week in the US. You've got over 100 companies for the S&P 500 reporting, and some of the big tech companies, sort of Apple and Amazon report, and Microsoft this week. Now, you had Alphabet report last week, and those are some pretty reasonable numbers, but the increased spending on CapEx was caused a little bit of concern for the market. Now, obviously, the other big news this week will be the Fed meeting. Well, they don't expect the Fed to increase interest rates. Certainly, the tone is more likely to be hawkish, given the persistent and rising inflation. And certainly, if you look at US rates, they are certainly indicating the next move is up from the Fed. The 2-year is 4.35, that 10-year is 4.68, and the 30-year is 5.16. So certainly for all the hope that Trump had that once he appointed Kevin Warsh, rates would start to come down, that is not going to be the case. Now, obviously yet to see what the real impact was of the World Cup on the US economy. But again, in a strange sort of irony, Trump a couple of weeks ago and said that he wanted nothing to do with Spain because they refused to sort of help him out with the military bases for the Iranian conflict. But yet when Spain won the World Cup, he was on the sort of stage celebrating and really wouldn't leave. Trump certainly made a lot of noise as well about being able to end the Ukraine-Russian conflict. But that seems to have gone under the radar as that war continues, and really sort of very quiet for the White House and the Trump administration on trying to end that conflict. So as mentioned, oil has come back a little bit, and with that pause in hostilities, WTI is 89.80 and change, and Brent had come back from the $100 at 96.70 and change. But if you look at that, that's still around 25% higher than when the ceasefire was announced. And certainly this latest spike in oil prices will have a meaningful impact on gasoline prices around the world. Now in the UK we have a new Prime Minister. That's the 7th in 10 years. Andy Burnham is now the UK Prime Minister. And it's really going to be pretty interesting to see what sort of impact he has, because certainly when he was Mayor of Manchester, he did a really good job of sort of promoting business and getting business investment into that area. Now also the Bank of England meet this week as well. No one expects them to put up rates, but again it would just be interesting to see what commentary comes out. Because really the last thing the UK economy needs is higher interest rates. Now in the EU region, they're really grappling with wildfires. You've got pretty major wildfires in France, Italy and Spain. And that really couldn't have come at a worse time as you start to see the sort of summer period and tourists coming into these sort of regions, and many having to be evacuated. Now the Australian economy is still pushing along at an okay rate. They've seen a little bit of a major sort of policy announcement coming out of the government in terms of their AI policy going forward. and it'll just be interesting to see how that sort of impacts the Australian economy. Because certainly for all the doubters out there, AI is going to have a major impact on economies going forward. Now here in New Zealand we had the latest inflation data, and that was up as expected, pushed up to 4.1%. But the bulk of that was because of the oil price spike, which is really out of the government's control. But if you take that out of the equation, then inflation was really reasonably well contained. Now, given we don't have a Reserve Bank meeting for at least a couple of months now, it'll just be interesting to see obviously what happens to oil prices over the next sort of 4 to 6 weeks. Because although gasoline prices have risen over the last sort of week or so, they are well off the highs. And that does help to dampen down some of the inflationary expectations. A little bit of better news as well out of the latest global dairy auctions. That was up for the first time in about 4 auctions. And certainly the latest business confidence surveys are reasonably encouraging as well. They're showing a few sort of green shoots coming through, which is encouraging. Now obviously all parties are really in election mode now as we're heading into the November election. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.